if the US government wants to get to 1 million Bitcoin, or Qatar, or UAE, or I don't know, UK, okay? And they say, I'm going to buy 1 million Bitcoin in the open market. The UK buying 1 million Bitcoin, or the US buying, or China, Bitcoin's going $1 million, right? Whereas someone says, I can buy like the US government might say, MicroStrategy has 600,000 of this already.
Yeah.
I'll pay 200% premium, and it was cheaper than paying $1 million per Bitcoin. So that's called a sovereign put.
Right.
Well, guess what? In the Ethereum world, because it's a staked token, if one of these treasury asset companies gets to 5% of ETH, they are hugely important to the ETH ecosystem.
100%. Yeah.
So then their multiple should go up. Because, Goldman Sachs, for instance, if they do a Goldman dollar and it runs on Ethereum, they want to make sure the Ethereum network is secured. So eventually they're going to be buying a lot of Ethereum.
Right.
In order to show what really influences asset prices over time, fundamental resilience and structural behavior, Tom Lee breaks through the cacophony of daily market panic. Lee directly challenges the prevailing narrative of fear in his most recent statement. While many analysts focus just on headlines, he looks deeper and finds a pattern that is sometimes overlooked. A crisis rarely begins when markets fall without a corresponding increase in credit stress. Rather, it typically serves as the precursor to a robust recovery. Despite widespread fear, Lee emphasizes the strength of the consumer, the stability of corporate earnings, and the improving economic backdrop. He believes too many investors are stuck in a post-2008 mindset, waiting for a central bank lifeline. But that's where they go wrong. According to Lee, market recoveries don't always need the Fed. In fact, some of the strongest rallies in recent history were driven not by institutions or policymakers, but by retail investors seizing opportunity amid fear. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
When the Fed is adding liquidity, it's just giving the money to the banks.
Right.
So if the banks aren't lending, like that was happening like after 2008. They gave the money, the banks just built up reserves.
Right.
Like it wasn't sloshing around.
Correct.
So the more important money is actually retail. And that's gets, there's four or five real distinct cohorts in the market today. So we know there's institutional.
Right.
There's non-US.
Yep.
Right.
Foreign.
And everyone's like, oh, we're leaving the US. There is high net worth.
Family offices.
Yeah, exactly. They stay bearish because they follow what hedge funds do.
Right.
Then there's corporates who do buybacks.
Correct.
And then there's retail. Retail was the only one buying the market at the April lows.
40 billion in March and April.
Yeah. I'm very proud of the retail investor. I think it's because retail investors see this as a stock market. They're like, I like Palantir. I own Meta. Like, should Meta get killed because of tariffs? You know what I mean? Like, should Palantir get down to 80? Like, if you think about it, like, a retail investor sees it as stocks.
Right.
But the higher up you go, they're more macro. They're like, oh, Trump's going to just drive us off a cliff. The Fed's going to kill us. And so these actually create biases.
Right.
And then when the actual economy doesn't, or the stock market doesn't react to what their framework is, then they're like, oh, the market's insane. This is the dumbest rally.
Correct.
Only retail's buying. And so then they're caught off sides because they're now sitting on cash, institutions, on a complete full V-shaped recovery. And that's why it's the most hated V-shaped recovery. So, but if you look at the bond market, it flips. The bond market historically votes Republican.
Correct.
So most people think Trump is a madman, right? Because they didn't vote for him.
Are you saying TDS is one of the reasons why people did not buy the dip?
Yeah, we write about it a lot in our research, actually. So it's a partisan stock market. And actually, so these have been uncomfortable conversations that we've had all year because...
I would imagine.
Yeah, because they're like, Tom, you're telling us not to sell. Because our advice was, don't sell. Like, even though I didn't know where the bottom was, I did know it would be V-shaped.
Right.
But they're like, Tom, we can't do that. And then I was like, well, I showed the stat. Whenever the VIX is above 60 and then it closes below 30, 100% of the time it's been the bottom.
Correct.
And they're like, well, it's different because the Fed's not going to save you. So everyone found a reason to actually argue for why a recession was starting. And as you know, economists went full on recession call.
That's correct.
So if you're a equity guy, how can you go stocks are going to do V-shaped when the economist of the firm just said there's a recession? So I think they got caught, and we're not having happy conversations with people. Well, it's fact-based because we had a drawdown of more than 20% and then we made a new high. So like the weird math that like, let's say a commodity trading advisor, a CTA,
right,
has is that when you have a drawdown and then you make a new high, that date is the start of a bull market. So actually, like in the mind of the institution now, breaking 61.41 was a new bull market.
Wow.
But the retail investor bought it at 4,800 to 61.41. But the algos are going to say a new bull market started like last week.
Now, we're concentrating on cryptocurrency. Tom Lee examines Ethereum in detail, looking beyond its price. According to him, Ethereum is in a unique position at the intersection of two strong forces: the effort by the cryptocurrency community to move real-world assets like equities onto the blockchain, and Wall Street's increasing interest in transforming cryptocurrencies into conventional financial instruments. Stablecoins are at the heart of this interaction. Lee claims that stablecoins are the ChatGPT of cryptocurrency since they have transcended excitement and found practical use. Consider Circle. It is currently regarded as a major participant on Wall Street and has grown its stablecoin business to $70 billion. However, it is more profound. Stablecoins currently rank 11th in the world and are among the biggest holders of U.S. treasuries. Since roughly 80% of stablecoin transactions take place outside of the United States, this is not only a financial move, it also has geopolitical ramifications, significantly expanding the U.S. dollar's dominance globally. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Well, Ethereum, I'm sure the audience kind of knows Ethereum, but I like Ethereum because it's a programmable smart contract blockchain.
Right.
Okay. But that's a mouthful.
Yeah.
I would say the real reason I kind of would say I backed into Ethereum is that stable coins are really taking off.
Circle,
Yep.
$70 billion company.
Circle's like the best IPO in 5 years.
Correct.
And it trades at 100 times EBITDA. And it has made the performance. For some funds, it has made their year.
Wow.
It's what put people in the top 1%. So proof in the traditional Wall Street world, Circle is like God level stock.
Right.
And it's a stable coin. Stable coins are the ChatGPT of crypto because it's really crossed over into the mainstream. But it's really evidence that Wall Street is trying to equitize tokens.
Correct.
But then the crypto world is tokenizing equities because they tokenized $1, right? And then now you're seeing, JP Morgan wants their own stablecoin, Amazon, Walmart, Goldman. Well, stablecoins are a great business model and they work really well for consumers and merchants, but they all have to operate on a blockchain.
Correct.
And the majority of stablecoin transactions take place on Ethereum. So Ethereum's been like kind of out of favor. It peaked at close to 5,000 several years ago, and it was stuck at like 1,400, 1,500. It's back to like 2,400. But stablecoins are only 250 billion today.
Correct.
It's 30% of the gas fees on Ethereum, and Ethereum mints more than 50% of all stablecoin creations. Treasury Secretary Scott,
he loves them.
Yep, and he says he thinks it's a $2 trillion market, which is 10x increase. The U.S. government wants more stablecoins because stablecoins collectively are the 12th largest holder of treasuries.
Correct.
And they're creating a lot of dollarization. 80% of stablecoin usage is outside the U.S.
Right.
So, but a 10 times increase in stablecoin creations is an exponential growth in gas fees for Ethereum. So I think Ethereum is a very direct beneficiary of Wall Street trying to equitize crypto.
Correct.
And crypto tokenizing equity. It literally sits in the middle. And so I think that's why Ethereum, I think, is going to be rediscovered this year. And then, of course, we're seeing it now because Robinhood is, because I think, crypto is a narrative-driven space, okay? Because it really runs on trust.
Right.
And so we know Bitcoin, the thesis is trust and, digital gold. But I think the story now is programmable money. And so maybe what you're seeing is people are discovering that you not only want programmable money, but you want to be running on the biggest network that does programmable money. And Ethereum is 300 billion. So it is the largest smart contract blockchain. So right. I think that's why Ethereum has the opportunity to really transform. Yeah. Well, I won't necessarily speak to BMNR specifically, but I can speak to why treasury companies, which is what BMNR is, makes sense. Because someone's going to say, oh, well, if I want to bet on Ethereum, why don't I just buy the ETF?
Right.
Or why don't I just buy it on chain and
custody or something?
Custody, right? Yeah. But see, a treasury company has 5 real important pieces of optionality. Okay. So if you buy an ETF or if you buy Ethereum on chain, your units held of Ethereum is going to be constant, right? I mean, if you buy an ETF, you have a contractual amount of Ethereum you
Correct.
have. And it maybe shrinks because they charge you fees. But these treasury companies, their goal is to grow the token held per share.
Right.
MicroStrategy, that's their benchmark, key performance metric. So one, if it trades at a premium to NAV, net asset value, they can issue stock and create more net asset value per share.
Right.
That's actually what they call reflexive growth. I don't think there's very few things in the equity world that are reflexive that way. Number two, because the underlying token is quite volatile, in fact, Ethereum has twice the delivered volatility of Bitcoin.
Correct.
If you held Ethereum an ETF, and you said, I want to leverage it and buy more Ethereum ETFs by borrowing money, the bank's going to charge you 10%. But if you're a treasury asset company, one, you're a corporation, so your cost of money is cheaper. But two, you can sell the volatility in the form of convertible or derivative, and then your cost of capital in MicroStrategy's case is zero.
Right.
So you got two levers to pull. So an example is MicroStrategy has 600,000 Bitcoin.
Yep.
If the US government wants to get to 1 million Bitcoin, or Qatar, or UAE, or I don't know, UK, okay, and they say, I'm going to buy 1 million Bitcoin in the open market, the UK buying 1 million Bitcoin, or the US buying, or China, Bitcoin's going to $1 million, right? Whereas someone says, I can buy like the US government might say, MicroStrategy has 600,000 of this already.
Yeah.
I'll pay 200% premium, and it was cheaper than paying $1 million per Bitcoin. So that's called a sovereign put.
Right.
Well, guess what? In the Ethereum world, because it's a staked token, if one of these treasury asset companies gets to 5% of ETH, they are hugely important to the ETH ecosystem.
100%. Yeah.
So then their multiple should go up. Because, Goldman Sachs, for instance, if they do a Goldman dollar and it runs on Ethereum, they want to make sure the Ethereum network is secured. So eventually they're going to be buying a lot of Ethereum.
Right.
According to Tom Lee, cryptocurrency is a trust-based, narrative-driven industry. As digital gold, a safe haven of value in the digital era, Bitcoin gained that trust. However, the crypto narrative is changing today. Lee claims that programmable money, of which Ethereum is at the core, is the new and more potent narrative. With a market valuation of almost $300 billion, Ethereum is the biggest and most reliable smart contract platform. It is not simply another blockchain. You want to employ the most robust and popular network for developing financial apps that automate, tokenize, and link real-world assets. Lee also draws attention to a new kind of participants in this ecosystem, treasury firms that specialize in Ethereum. These companies are made to hold and grow Ethereum as a strategic asset, much like MicroStrategy does with enormous quantities of Bitcoin. However, these businesses have special benefits in contrast to an exchange-traded funds which only stores Ethereum and charges a fee. In order to acquire money and purchase more Ethereum, they can first issue stock when the price of their shares rises above the value of their net assets. According to Lee, when valuations split, these businesses can use arbitrage to merge with other cryptocurrency treasury organizations. Fourth, they can function as legitimate companies that stake Ethereum, lend it out, or create tools to help the Ethereum ecosystem. Lastly, they possess a hidden value that Lee refers to as a structural put. For instance, if a government or other huge organization needs a significant amount of Ethereum, it might be less expensive to buy a corporation that already has it than to purchase billions of Ethereum on the open market and raise the price. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.